Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. Just when I was thinking that this was going to be a dullish sort of week for the FANGs, along came the quarterly results for NVIDIA and blew a veritable gale of excitement into the market. It certainly appears that artificial intelligence could be catching on with investors who have not had much excitement to celebrate recently. But I also do have to wonder whether we may be on the brink of another investment fad with all the excesses that often come when the next new thing comes along, whether it's the dot-com stocks or cannabis stocks. If so, history does tell us that things can go much further than seems sane, sensible, or reasonable to cooler heads. History also tells us that these frenzied obsessions virtually inevitably lead to very nasty and painful ends. Now, you will recall clearly, I hope, from when last week I asked to be or not to be, that is the question. The B standing for an overall market breakout, of course. As of the close of last Thursday, the Standard & Poor's 500 and the NASDAQ 100 were 1% and 2% respectively away from reaching their powerful key SVA breakout support resistance levels. These are the super growth price for the Standard & Poor's, 3.5 times adjusted book, and the bubble price for the NASDAQ 100, or 7.4 times adjusted book. I did say that I would expect to see some stalling out here, whether or not this is a peak for the market. And it was no surprise that the FANGs did indeed stall out there for a moment. However, as we will see in a moment, when we take a closer look at the FANGs, that powerful, almost stunning surge in NVIDIA has resulted in a strong move by the other AI stocks among the FANGs and the NASDAQ 100 index itself, which is now popped back out over its bubble price. That's 7.4 times book value, if barely. The Standard & Poor's 500 has not, as of yet, confirmed what could be a putative breakout of the NASDAQ 100, so caution is advised. But maybe hopeful caution is the watchword of the day. Both the Dow and the TSX are putting on an improving trend today, so perhaps is sort of pulling all stocks together higher. Anyway, before we take a close look at the FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Well, here's NVIDIA, and there's that lovely breakout over the HB6 price, 33 times book value. And that is a very significant move because the HB6 price was the high for NVIDIA going back some 23 years, the last time being in 2000. By the way, of course, you know, when we get a breakout like this, it typically means that it's going to carry to the next higher valuation level, which is its HB7. Now, which would be 44 times book value. Well, we know what a breakout and like that kind of a leaping breakout looks like, because it's happened with Meta. Remember, we were kind of wondering what to do with Meta when it was below its LSG price. Well, the market took the decision out of our hands and simply jumped. And the stock looks very much as if it wants to continue to head higher on rising fair market value as Zuckerberg starts to pay attention to what's actually going on in the bottom line. Apple just continues to kind of float along its HB6 price, 33 times book value. It may look as if it's breaking down here, but that's only because we are unable to have sort of monthly balance sheets, so that I think with the buybacks that have been going on, that the HB6 has been sort of moving around down here, not up there. Alphabet, well, Alphabet looks very much like it may be breaking out over its mid-super growth price, or 5.5 times book. It is, of course, I think maybe acknowledged to be the other major AI company, the first one, of course, being Microsoft. And if this is for real, then maybe we're going to head back up to its old high, its mid-super growth price. Anyway, let's watch very carefully, because this is a promising development. Amazon had a very, very, very slow rise, very indifferent quarterly numbers, and the shares have been moving up almost reluctantly. But today, it looks as if they may be breaking out as well. Now, I don't expect any kind of a runaway on powerful positive news, but you know, we get a breakout over the bubble price. The last time that happened, it went at least to its HB1, which would be another 28% higher than today. So let's watch this one carefully and make sure that it can hold. Microsoft surprises me, actually, because with the powerful move in NVIDIA, kind of confirming, if you like, the AI movement. Well, here's the almost the father of AI. With its chat GPT programming. However, it continues, I think, to move higher. I do note that, look at the fair market value, it's not exactly soaring, is it? So maybe it's a reluctant participant, but nonetheless, one would have to hold this stock, I think, very clearly, given what's happened. Netflix continues, I think, perhaps to move back to its bubble price. Again, I have not changed my view on Netflix ever since I suggested that the stock probably would be a take profit sell kind of a situation at its bubble price when it had recovered all the way up from its super growth price. I perhaps could have been a little more positive on the company, but I think the slowness of its growth and profitability suggests caution here. Finally, Tesla actually has rebounded today to its HB2 price, so we'll have to watch now to see whether this stock can break out. What does concern me, of course, is this steadily faltering fair market value trend. And I guess I would say I'm from Missouri. However, if NVIDIA is going to trigger a whole breakout in the market, perhaps we should be a little more optimistic towards Tesla than I have been. Now, what are we seeing? First and foremost, NVIDIA leapt over its HB6 price, 33 times book, which may well be highly significant, as that was its 23-year high, which it touched twice, once in 2020 and the other way back in 2000. We may have to wait for a breakout pullback to confirm that this breakout is to new all-time valuation high territory, although we may also see a runaway movement to the upside, as we have seen in such stocks as Meta and Netflix in the recent past. You may recall something that I have said before, namely, the market has a memory. So when an established high or low valuation is exceeded, very interesting things may be afoot. Meta, after a gap breakout over its low super growth price, is holding well here. And if the NASDAQ can hold its own breakout over its bubble price, might, and I emphasize might, enjoy a recovery to its own very long-term high at its own bubble price. Apple continues to hold roughly above its HB6 price, 33 times book, and all those share buybacks. Frankly, I have little personal enthusiasm for the stock, as it is expensive and slow growing. But nobody asked me for my 2 cents worth, and the market continues to believe. Now, there were 3 uncertain stocks. The first one, Alphabet, has broken out over its mid-super growth price. That's 5.5 times book. It did it a few days ago, although it has done so without much enthusiasm. But the AI tailwind could now help to hold those shares above their MSG price and set up a run to its bubble price, or 7.4 times book, its long-term high. Amazon has reached back to its bubble price from which it originally broke down in October of 2022 and tested in February of this year. I did say that I suspected that the shares would break out if the Standard & Poor's and the NASDAQ were to break out. Last week, I noted that there was no indication that either event was in the cards. But this week, the NASDAQ is trying to break out, and now, so apparently, is Amazon. If this stock is to hold above its bubble price, I would definitely look for a breakout pullback kind of technical action. Microsoft is like that grand old Duke of York and his 10,000 men. It's neither up nor down. In the light of NVIDIA's move, I must observe that its AI fundamentals look more promising than other AI stocks. Finally, I have 2 weak hold sells in my FANG list. Looking at Tesla, after dropping 1 breakpoint, or 23% from its HB2, those shares have been oozing modestly higher, accompanied by some very contradictory messages on future pricing of their cars. The shares have continued their slow uptrend, and I'm not sure whether they're actually going to be able to render a breakout signal for the stock. It's close. Finally, Netflix gave the market some surprising and positive palpitations last week. But the reality of the market is that the promise of huge future business growth and revenues from advertising are very much in the air. The sell signal at its bubble price, 7.4 times book in March, has not been rescinded and won't be unless or until the shares can break out above that level. If what we are now seeing is a NASDAQ 100 breakout over its own bubble price and it is confirmed by the Standard & Poor's 500 with a breakout over its super growth price, 3.5 times book, then you may choose to throw caution to the wind. Both are extremely close at hand. However, I would have to say that I've seen this kind of thing before. The last time being the 1999-2000 breakouts with very high valuations and poor supporting fundamentals of the so-called dot-coms. Volatility can be fierce. You may have a lot of fun while these things last, but they have all ended abruptly and badly. Please be aware that you will not be investing in these stocks. You will be speculating purely and simply. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.